the warm welcome to Money to Grow channel. I'm excited to help you with insights, strategies, and tools to grow your wealth and make informed financial decisions. Whether it's stock market analysis, personal finance, or investment tips, I'm here to support your journey. Chartink's scanner is a great tool for identifying potential stock moves based on custom technical parameters and filters. Here's a general approach you can use to set up scans to identify stocks before they make a move. Identify breakouts or breakdowns. Scan for stocks where times price is breaking out of key resistance levels. Times price is breaking down from key support levels. Times high volume breakout. Look for breakouts with increasing volume, which confirms the strength of the move. Times candlestick patterns. Scan for reversal patterns such as bullish engulfing, hammer, or shooting star, which can signal reversals before moves. Filter based on volume and liquidity. Focus on stocks with sufficient trading volume to ensure liquidity. Scanning for stocks with a significant increase in volume can indicate the potential for a larger price move. Times volume greater than a certain threshold. Example, average volume 500,000. Times volume surge. Example, 2 to 3 times the average volume over the past 20 days. Look for volatility contraction patterns. Before a big move, stocks may contract in price, forming a tight range. This is often referred to as a volatility contraction pattern, VCP. When the range tightens, a big move can be imminent. Times look for narrow range days, example, NR7 or NR4 patterns. Times stocks forming a flag pattern or pennant can indicate consolidation before a breakout. Combining multiple indicators. Using multiple indicators increases the probability of catching moves early. For example, times RSI below 30, oversold, and MAC crossover can indicate a potential reversal. Times price above 50-day moving average, with volume increasing, can indicate bullish momentum. Price action signals. Times higher highs, higher lows for an uptrend. Times lower highs, lower lows for a downtrend. Times bullish engulfing patterns at support levels. Times doji candlesticks can signal indecision before a reversal. Sample charting scanner setup. You can combine these ideas into a scan on chartink. Here's an example of how a scan might look for identifying bullish stocks before a move. This scan would give you a list of stocks experiencing a technical setup that is bullish and potentially about to make a significant move. You can modify the scanner based on different timeframes, intraday, daily, weekly, and parameters that match your trading strategy. Now first we go inside the screener, take charting.com, create an ID there, it's free, no tension in that. Okay. I have also taken its paid version because I need a lot of things in real time in my real market. So, I have also taken its premium version. You can get it by making an 800 payment, but if you don't need it, you can manage with its free version. Okay, now like we need to fill this week's data, it is necessary for this week's high to be above last week's. The third thing we will write in this is that the closing of this week should be greater than the opening of last week, meaning we will take the opening of this week. The latest opening of this week should be greater than what it was 1 week ago. Okay, the closing of this week, I have written the opening here, you should write it down, it should be greater than the opening from 1 week ago. This means that the closing of this week should be above the opening of last week. Our closing for this week should be above the closing from 1 week ago. Okay, the closing of this week should be above the closing from 1 week ago. That is, our close should be more than open, and the close of this week should be above the open of the previous week, meaning it should be above the close as well. It should be above our close. Okay, where we do 1 week ago, this will come weekly. This week's will come okay. So, the weekly closing should be greater than the close from 1 week ago, and the weekly closing should also be greater than the open from 1 week ago. Now the question comes that your closing should be for stocks slightly above 50. What should you do here? Just put in the closing and here put in weekly and write that it should be greater than, and here you can put a number. You need stocks that are above 50, or you can write according to your assessment whether it should be above 100. So, if stocks above 50 are not coming out, then till now we have covered what? That the weekly open should be equal to the weekly low, then the weekly high should be greater than the high from 1 week ago, and the weekly close should be greater than the open from 1 week ago, and the weekly close should be greater than the close from 1 week ago, and the weekly close should be greater than the number 50. Now here we need to add one more thing, two things actually. One, we need to write the weekly volume as well because our weekly volume should be at least 300,000. So, let me check here, 300,000, 30,000, 300,000, okay friends, I have made it 300,000, okay. Now at the end, one thing comes up that the volume of this week is the average of the last 20 weeks, meaning the average of the 20-week moving average. How to write that? Let's see here. We will write volume and we will set it to weekly and we will write greater than, and now we need to write that brother. Here we will set SMA for the past, so it's fine, weekly SMA, and instead of weekly close, we will set it to weekly volume. And we need double from this. What will you do? And here you will set the number 20. You can see that all our conditions are being met, mean weekly open should be equal to weekly low. You can set this, so look at all our conditions being matched here, meaning weekly open should be equal to weekly low. This week's weekly high should be greater than last week's high. Weekly close should be greater than last week's open. Weekly close should be greater than last week's close. Weekly close should be greater than number 50. Weekly volume should be above 300,000, and this week's volume should be at least double the last 20 weeks moving average. So these are our conditions. Now we save this, and here we write that our moving average should be at least double. So our conditions are complete. Now what do? We save this and here we write that this is our weekly volume breakout. Using a stock screener is a powerful way to find moving stocks and capitalize on upcoming trends. You can configure the screener based on technical indicators, volume spikes, or other criteria that help identify stocks in motion. Here's how to create an effective screener to find moving stocks. This setup will help identify stocks that are gaining momentum, both in price and volume, and are likely to continue moving in the short term. If you are targeting a specific strategy, such as intraday movers or swing trading, you can adjust the filters accordingly. Would you like more specific parameters for your trading style or time frame? Thank you for watching the full, useful videos. Your support is appreciated. Stay tuned for more insights to help you grow financially.